All right, hi everyone. Welcome to today's webinar brought to you by IC Markets, where today the topic is going to be on Quasimodo trading strategy. Where we'll be studying very shortly. Just want to make sure you guys can see my presentation screen. You should see the title of the first page of my slide, which is IC Markets Global Webinar, Quasimodo Trading Strategy, 21st November. I just want to make sure you guys can hear me loud and clear. All right, great. Thanks, Rajesh. All right, okay, awesome. All right. We'll just start at 5:30 exactly. For those, there might be a few attendees that might be just tuning in, so let's just wait for them, and then we'll start at five in 1 minute shortly. Yeah. All right, okay, right. Okay, can you hear me now? All right, okay, let's go. All right, I've just started again. Okay, right, okay. All right, as usual, before we start, here's the disclaimer. Please take note of the disclaimer here that I'm showing on my page. And also do take note of the risk warning that comes with trading Forex and CFDs, right? These are instruments that carry a high level of risk to your capital, and you should only trade with money you can afford to lose. All right, trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. All right, so my name is Ketan Ramachandra. I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so here's the agenda for today. So we'll take a quick look at what is Quasimodo trading strategy in Forex, what are the typical Quasimodo patterns, and of course, how do we place your trade, right? All right, so what is Quasimodo in FX or Forex trading? Well, it simply is a chart pattern that consists of swing highs and swing lows that make a change of character within an existing trend, right? So this means it could be a bullish uptrend or a bearish downtrend, and then suddenly you're going to see a potential reversal taking place, and that's what we'll be looking for. So what this CHOCH stands for is basically change of character, which is which simply just means we're looking for reversal in the current trend, right? We're going to try and recognize the patterns of this reversal or this change of character, and then using the ability to identify this pattern, uh, identify potential short and long entries for the trade. Right, so it's basically, as the second point clearly highlights as well, right? It's a reversal pattern that forms around the end of an existing trend. So basically, it happened at the end of the trend, right? That's when the reversals occur. So this can be bullish. This could be a bullish reversal, which would signal the end of a downtrend, or of course, it could signal a bearish reversal, which is the end of an uptrend. So simply put, the Quasimodo trading strategy or the chart pattern is also very similar to a typical head and shoulders pattern, right? So as you can see here, this is the character, I believe, from Disney, right? That's why this strategy is named after this character, Quasimodo, who has a hunchback. So they've used him as a reference here. So his left, the chart pattern would consist of the left shoulder, the head, and the right shoulder. So basically, his right elbow here is the left shoulder, his left elbow is the right shoulder of the pattern, and the head is there. And obviously, of course, this applies to both the regular head and shoulder patterns as well as the inverse head and shoulders patterns, right? So this is what the Quasimodo pattern generally would look like. Right, so what are the typical Quasimodo patterns, right? Since we mentioned they're reversal patterns, right? So there's going to be a bearish pattern as well as a bullish pattern, right? So as you can see, the Quasimodo pattern is quite simply the equivalent of a head and shoulders here. So this is your typical head and shoulders pattern. So if you have the left shoulder forming, then price making a new high, then as the price reverses and comes to low, we are able to identify the neckline, right? And as price breaks through the neckline and reverses up back to the neckline again, that's when it would signal the uh, the reversal or give confirmation of the reversal, and price drops lower. So as you can see in this part here, this is part of a rising uptrend. So you see a series of higher highs, right? Higher highs here and higher lows here, right? So that's what we are trying to identify, right? So we see a series of higher highs. This is the first one, second one, third one, and then we're also seeing a series of lower lows. This is the first low and the second low. And as price makes the reversal from here and drops down, that's where we're able to identify the neckline, right? And when price drops below and reverses up around to this level, it may not be at exactly this exact level, but it'll be close enough to this level. That's when we know that the neckline is complete, and then price will typically reverse off this neckline and drop lower. So that's when we know the head and shoulders or the bearish Quasimodo pattern has been formed, right? Similarly, for the bullish Quasimodo pattern, as price is falling down sharply, it is making a series of lower highs and lower lows, right? So you can see here, this is a lower high, this is also a lower high, right? And of course, on this side, you can see the series of lower lows here and here. And of course, once price makes the absolute swing here, it comes back up and starts to go up, that's where we can start to identify the start of the neckline here, right? For this is for the bullish pattern. So as price comes up, goes above, and then retreats down to the neckline, and if price bounces off this neckline once more, then we know that this is this is a confirmation of the bullish reversal, right? Okay, so just to repeat, uh, for the bearish Quasimodo's pattern, right? We're looking, price should be in a strong uptrend, making a series of higher highs and higher lows. And then once that pattern is invalidated, right? You can see here, price made a new low here, but it actually broke the market structure, right? It didn't continue to be as a series of a higher low. It actually broke the market structure, then proceeded to come back up to the neckline. And should price fail to break above this neckline again and reverses, that's when we get the confirmation of the bearish Quasimodo pattern. Similarly, for the bullish Quasimodo pattern, price is falling sharply in a downtrend, right? Price is in a strong downtrend, making a series of lower highs, which is here, right? This is one high, a second high, and a series of lower lows, right? And as price makes a new low here and reverses, technically for it should be going down like this if the bearish continuation was to continue. But in this case here, you can see price start to come back up above this previous low, and then reverse again. And then should price fail to break fail to file, if price reverses from this neckline here and goes higher, that's when we know we have the confirmation of the bullish reversal, right? So you can see the market structure has been broken, the series of lower highs and lower lows has been broken. And then as the price structure pulls back and bounces off this neckline, that's when we get the confirmation. Right. Okay. There's a question by Haji. Again, which point would you consider change of character? All right. The change of character would be here. The change of character would be at this point here, right? You can see here is for the uptrend, it should be making a series of lower or higher lows, right? Higher lows. But you can see the next low actually came in below this point. So when price breaks below this point, we already have a change of character. Similarly, to the upside, this is the level here. This is the series of lower highs. So price should actually be reversing around here. But the fact that price continued to go higher and go above this previous high, this is when we have the change of character, right? All right, the second question is, do we enter at the point R or after the rally? Right, so once, be it so for the bearish or bullish, once you see price react off this level and start to come down, or in this case for the bullish pattern start to react off the neckline and start to go up, that's when you should be entering the position, right? All right. Okay. Are there any other questions before we move on to the next section? Right, that's clear. Haji, is that clear? All right, thank you. All right, so how do we place the trade? So as you can see here, price is making a series of lower highs and lower lows. But once price reverses here, actually the next price for the continuation to hold true, the price should be reversing below this level here and continuing down. So this, if that were to happen, that means price is still in a bearish downtrend, right? But because price has uh, gone above this previous hang on, sorry, previous high, right? Because price has gone above this point here, that's why we have a change of character. All right, so stop loss will be at point H. Okay, so for a potential bearish, bullish pattern, right, you will be looking to buy at the neckline or just after price has bounced off. So technically, yes, the stop loss would not be at exactly the head, right? You'll probably give yourselves a little bit of buffer. So probably maybe this, depending on your risk reward ratio and your contract size, right? Probably ideally anything between 10 to 15 pips in general away from the head would be where you would place your stop loss, right? So this is for the bullish trade, right? So I'll explain, and it'll be the same for the bearish trade as well. Any fib level to entry higher J. All right, okay. This time frame can be used across this strategy, sorry, can be used across multiple time frames. So depending on your trading strategy, are you using the 15-minute chart, 30-minute, 1 hour, or 4 hours? It's actually more about identifying the pattern itself. So this pattern, if you are able to spot this pattern on the 1 hour chart, 15-minute chart, or any other time frame, that's more important, right? So this, I would say, the strategy doesn't really have a specific time frame where it works better on, right? But as long as you are able to identify the patterns and you can see this pattern being invalidated by seeing the change of character, that's more important, right? Okay, fib levels. This, you can combine this with fib levels for sure. You can combine this with fib levels. Uh, as an overlay, right? You can use this to combine it, and also you can combine it with other indicators as well. For example, if you're looking at stochastics as well, you can overlay it with stochastics too, right? So like in this case, in terms of a bullish reversal, right, perhaps your stochastics are indicating oversold position, right? So if you do see your stochastics indicating oversold position, and then you see this pattern play out as well, it adds as a uh, secondary factor, additional factor to the confidence of your bullish reversal, right? Okay, so just to repeat, the stop loss here would be just below the head, right? So once again, depending on your risk reward ratio, be it as an absolute, in terms of absolute terms of pips, or as a percentage of your account size, typically 10 to 15 pips underneath the head is is more than sufficient usually, right? So when price and your buy entry will be at this neckline here, and the change of character happens here when price does not make a lower high, right? You can see this is a lower high here, lower high, lower high. So you can see the highs are getting lower and lower. But in this case, the high did not make, actually went above the previous high. So that's when you know that the pattern is invalidated and we have a change of character, and as price reverses back down to this neckline here. And if price bounces off this level, that's when we know we have a confirmation of the bullish reversal, right? So price should bounce off this level. That's where the buy entry buy entry will be identified around at this neckline or just slightly above, and stop loss will be just below the head, right? So similarly for the bearish pattern, right? For the bearish pattern, price previously is in a strong uptrend. Price is making a series of higher highs, right, and higher lows, right? So these are the higher highs here, and these are the higher lows. Okay, right. So as price makes this new swing high here and start to drop, if let's just imagine if price reverses and drops to here, let's say arbitrary level here, and starts to go higher, you can see that this low here is higher than this previous low. So there's no change of character, right? There's no change of character here. Price is still in a strong uptrend because the next low here was made above this previous low, and then it's going to go on to make a new high. So there's no change of character, and this is not uh, a valid bearish pattern, right? But because price has reversed lower and gone below this previous low here, that's why we have the change of character, right? We have the change of character. So now, should price continue to reverse? Okay, if price drops and then it reverses to come back towards the neckline here, remember, price should not break above this neckline. If price reverses from this neckline here, so you can put the sell order at the neckline, or you can wait for confirmation for price to react off this neckline and then drop lower. And of course, your stop loss will be just above the head. So similarly, you place your stop loss about, once again, depending on your uh, risk reward ratio and your risk management style, typically at the contract size. So typically at least 10 to 15 pips should be sufficient to should be sufficient as a buffer. All right, so similarly, right, price fails to make a higher high and a higher low. So that's the key thing. So it's all about identifying this pattern of higher highs, higher lows. For the bearish pattern and for the bullish pattern, it's all about trying to identify uh, a series of lower highs and lower lows. And of course, the other important aspect is price must make a change of character, right? Price has to make a change of character before we see the pattern really start to give us a strong level of confirmation. All right. Okay. Before we move on, is there anything else you'd like me to clarify with regards to the bullish or bearish QM pattern? All right. Okay. If not, then we'll just move on to the next. Okay. There's a question here. Okay. Must it pull back to the left shoulder, or may it pull back to the change of character line? Okay. Uh, no. Okay. See, it has to go. Okay. Wait. Pull back. Okay. Must it pull back to the left shoulder? Okay, I see what you mean. Okay, Desiree, I see what you mean. Yes, okay. For this chart pattern, the price has to go, okay, for in the example of a bullish QM pattern, price has to go above the change of character segment and then return down to the neckline, right? Price has to return down to the neckline and then bounce off. All right, okay, yes, Haji, we'll get to that as well. Towards the as we move on, we'll definitely going on to the live charts as well, and to try and identify patterns as well. Can this pattern become big and small in the same time frame at the same time? Okay, Dunaf, okay, I'm not. Could you elaborate a bit more on your question? That's okay. Can this pattern become big and small in the same time frame at the same time? Um, what do you mean by that? Multiple patterns. So are you um refer can the multiple patterns? Okay, are you referring to multiple patterns at a similar trading period, over a similar trading period? I mean, this pattern, if you're able to see it on the charts, right, if we are able to identify it, we should see it. It's not a very common pattern, but we will see it uh, on that particular instrument at various points in time, right? Okay, just trying to see. Right. All right. Okay. Is there any indicator? Okay, so I not that I'm aware of. There could be any indicator for there could be an indicator for the Quasimodo trading strategy, but it's something that I'm not aware of, right? There could be one, but yeah. All right, okay. So otherwise, let's look at Okay, so this we are on the 4-hour time frame, right? So in this example, we're on the where's my marker? Right, we're on the 4-hour time frame for gold. Right, this is gold XAU USD. Right, so you can see here, price is in a strong bullish channel, right? You can say this is a bullish channel. Price making a series of higher highs here. 1, 2, 3, and this is the fourth higher high, which eventually turns up to be the head. Now, and on the lower part of the channel, we can see price is also making a series of higher lows. This is the first low, this is the second low, and over here, right, you can see there's a change of character here. Price is still above this low here. Okay, let me just put this is low number 1, this is low number 2, right? So as price pulls back, it is still above the low of number 2, right? So as long as price remains above the low of number 2, there's no change of character. Okay, there's no change of character if price still remains above the low of 2. So in this case, price goes up, right? But it fails to go make a new high, but then it breaks underneath the low of number 2. So that's when we have the change of character. Now we know that this is a valid Quasimodo bearish pattern because we have a change of character and price comes up, coming back up close to the neckline here. You can see the left shoulder is about here, right? You can see the left shoulder has been identified on this part of the chart is here, and as price returns up to close to this level and then reverses, that's when we can identify short entry for this reversal, right? Okay, so let me just tidy up the chart and do it once more so that it's clear again. Right, so this is the first low, this is the second low, right? This is the first high. Okay, high is fine, but because this is we're looking for the bearish QM pattern, we'll be focusing on the lows. So it's a series of higher highs, series of higher lows. As price comes down, over here it is still not the change of structure has not occurred yet, right? Because this low has not gone below number 2, right? This low here has not gone below number 2. Even here at this point, the price has not gone below number 2, so there's still no change of character. Okay, okay, there's a question. Do you choose the wick or the candle? In this case, it would be the wick, right? You can see here, right? The change of character applies to the wick. So it has to be the absolute lowest point here. All right. Okay, Ranjit, you have a question. Why do you ignore the third low? Okay, okay, I guess it's kind of hard for you to tell me exactly, but okay, how do I put this? Okay, are you referring to this part of the chart here, the third low? Are you referring to this part of the chart? Can you let me know yes or no? Left, so this one here, are you referring to this low here? This one, are you referring to this? Okay, in a sense, why? Okay, 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 quite okay. It's a pretty decent question. Okay, because although here, um, okay, let me see. Why would we not consider this? Because if this goes lower, there is, yeah, you can argue in this example, it can be debated as well. In this example, it can be debated that there is a change of character around here as well. You could argue that because this could be a low, this could also be considered a low as well. But okay, I think because here you can see it's pulling back here, right, for number one. For number two, you can see it's clearly pulling back as well. For number three, okay, I believe the argument for this example is because it's more or less consolidating, we don't really see uh, the pullback here, right? It's more of a consolidation. We don't really see the pullback here. So that is why. And also, if you were to also, like, if you were to have a trend line here, right, you would see the next lower high would probably be coming around here, right? So I think that is why we've not considered this point as a low. Okay, right? All right, Ranjit, I hope that helps your question, because this is more of consolidation. You don't really see the price structure pulling back. Yes, that is true. That is true. We do not see the future, but for this case, because we are looking for, like you can see, like on this example here, we have a pretty decent trend line here, up here, where price finally gets broken here. Then because this is more or less, you can argue that this is more or less consolidation and not actually a pullback, because price is still sort of previously trending, could be potentially trending higher, but when it finally breaks lower here, right, that's when we are looking for this change of character at this point here. I agree. Uh, this is debatable, right? This is debatable for sure, and also this is all with the benefit of hindsight as well, right? This is all generally with the these examples are showing the benefit of hindsight, but when we move on to the charts later, we'll try and see how we can identify potential setups on the live charts. All right. So once you have this, no, it's okay. No worries, Ranjit. Valid questions, very valid questions, right? No worries. All right. Okay. So, um, right. Okay. So once you see price breaking under this swing low number two, that's when we have the change of character, right? And then as price comes up close to where the left shoulder is, so the left shoulder is now identified here. Once again, once you actually see price make this part of the move here, then we know we have the left shoulder, we have the right shoulder, and then as price comes back up here and reverses close to where the left shoulder was, that's where we can get a good sense of a higher level of confidence that this is a bearish reversal playing out. All right. Okay. Now we'll look at an example of the bullish QM pattern, right? So in this case, for the bullish pattern, you can see price is making a series of higher lows, right? This is one high here, another high here. This also you could sort of argue as well. You can see this is a general trend line here. Price is not broken above this descending trend line. And over here, price is making a series of lower lows as well, right? And once again, you can see this is probably a bearish channel here. All right, so this is what we mean by identifying a series of lower highs and lower lows here. All right, so then once so this was the next high here, right? This was one high. Okay, let's just label this number one, number two. Let's just label this as three, and this is four. Okay, so this was the high number four, and its price went to make a new low, right? And it's then when price started to come up, and if it breaks the top of the wick, as you can see here, right, we're not looking to use the body of the candle, we're using the top of the wick for the bullish pattern, and we'll be using the bottom of the wick for the bearish pattern, right? So it doesn't matter which time frame you're on, basically we'll be looking at the wicks, right? Okay, so as price over here, we still don't have the break of structure yet, right? Or the change of character, right? We still don't have it here yet. But then when price breaks above, sorry, where's the change of character? Sorry, oh, sorry, this is here. Actually, this is labeling. Why is this labeling like this? Okay, hang on, sorry. Okay, hang on. Okay, this is not the best example, but okay, my live charts later, I've got a better, it's more clearer in the other one. So, okay, here, because price has, yeah, you can see basically there's a very strong descending trend line here. Price has not continued to make a series of uh, lower highs, but instead now it's made a very brief higher high here. So you can see the change of character occur, and as price breaks, starts to pull back again. Remember, at this point, once price starts to pull back here, that's when we will, rather as price comes up here, we'll get a confirmation of the head. Then we should be looking at this as the left shoulder, and as price goes above the change of breaks above the previous high and starts to pull back, that's when we know we have a change of character, and we should be looking at this level around here to put on a long position. See, once again, right, price did not exactly come to exactly the bottom of this wick here, but should price reverse off this level here, right, just very close to this level here, it starts to go higher, that's when we know we have a pretty good confirmation of a bullish reversal. All right. Okay, now we're going to use the example of, in this instance, where would be the exact entry here. Okay, so for this example, uh, you would be looking for price to at least come very close to this level here. Let's just call this the neckline here, and then reverse off it. So because in this particular example, we don't really see price bouncing here, you could actually put a buy limit order here. You could place a buy limit order at exactly this price point here, which is this level, and then uh, but for this particular scenario, this buy limit would not have been triggered, right? Because we can see the wick didn't drop to exactly this level, but reversed just above it to go higher. So in this scenario, you could probably use this the opening candle, the opening level, as the buy entry. No, for this case, you would not need to wait for the long bullish candle to close, because you can see price has come very close to this level here, and because then it started to proceed up here. So once it goes above the opening uh, level of this particular candle, that would probably be a good point to enter the position. All right, welcome, Ranjit. Okay, so now we'll look at an example on the dollar index chart. Okay, so this was a chart pattern uh, in June, right? So in middle of June. So I'm on the dollar index chart, the DXY, and I'm on the H4 time frame, right? So you can see here price is making a series of higher lows, right? This is one high here, another high here, another one, and another one here, right? So a series of lower highs, sorry, and we have a series of lower lows as well, right? And then finally, in this case, this is where the head is. So in this example, this is the head, this is the left shoulder, right? And let me just tidy up this part here, right? So once again, we can see this is a strong bearish trend, right? Price is a bearish trend, it's in a bearish channel. It's making a series of lower highs, it's making a series of lower lows, right? Because but you can see once price makes this new low here, we can see it's just slightly lower than the shoulder. It's not a very deep uh, head, right? The head didn't drop as deep as we would like to make it clearly obvious. But what helps us to identify the change of character is also price breaking above this trend line, right? You can see that's why for the bullish pattern is important, at least if you don't have a channel, but at least have a descending trend line, right? By drawing a descending trend line, we are giving us a better visual aid to tell us that a change of character has occurred, right? So you can see that here, as price breaks above the upper trend line of the bearish channel, price also goes above uh, the previous high as well, right? Previous high, and then starts to drop, and then you can see it drops down all the way to where very close to where the left channel was as well. Okay, it's not exactly where the left channel is exactly, but you can see the once you can clearly identify the change of character, which is what we can see here, right? We can see the change of character clearly take place. Price breaks out of the bearish channel, price breaks out of the upper trend line of the bearish channel, starts to pull back. It doesn't pull back exactly to the left shoulder here exactly, but it pulls back sort of close enough to see that the reversal has occurred, the change of character has indeed occurred, and as price goes up, you would be looking to go long on the dollar index over here, right? So this would be probably be around 102.30, 102.40, going up to as high as probably about 103.40. So they're probably about 80 pips, looking to be looking to about 80 pips in profit, right? Okay. Is there anything else? Are there any questions with regards to this chart pattern here for this chart? Otherwise, we can move on to the next example. Right, okay, so let's move on to the next. So this would be an example of a bullish QM pattern, right? So this would be an example of a bullish QM pattern, right? So for the bullish QM pattern, to be able to spot a bullish QM pattern, we would need to see price trending in an making an obvious downtrend. As you can see, a price is trading in a bearish channel, making a series of lower highs and lower lows. As price breaks above the upper trend line of the bearish channel and breaks above the previous high here, we have a change of character. And as price pulls back and then starts to reverse to go higher, that gives us the confirmation to go long for this trade. As you can see, this bullish reversal was not a very significant reversal, but you were still able to capitalize on this trade because I'm on the 4-hour time frames. So this is probably about how many, 1 2 3 4 5, about 8 or 7 candles, or probably about over a period of 24 hours. So it's an overnight trade. Pretty much this would have been like an overnight trade to capitalize on this change of character and go take a potential bullish position on this reversal. All right, now similarly, this is another change of bullish pattern that occurred in September, right? Once again, I'm on the dollar index, 4-hour time frame. Price is in a bearish channel, is trading downwards, right? It's making a series of lower highs, right? This is the first high here, second high here, third high here, right? 1 2 3, right? Right, the first high is here, second high here, and the third high over here. Similarly to the downside, we have the first low over here, right? This is the first low, the second low, this is the third low, right? So in this case here, this is the head, of course, and once we know the head has occurred and then price breaks, we can see price breaking above the high of number 3. Not only is price breaking above the high of number 3, it has actually broken out of the upper trend line of the bearish channel as well, right? So you can see price breaking above the high of number 3 and breaking above the upper trend line of the bearish channel to give us that confirmation of the change of character. And in this case, as price pulled back, in this example, you can see price pulled back uh, pretty much exactly to where the left shoulder was, right? So remember, this low here is the left shoulder, this is the head over here, and then you can see this wick has actually dropped all the way down to where the left shoulder exactly is, and then before going higher. So you can see in this scenario, this was a more sustained move, probably going at about from let's just say if I were to take the opening level of the candle, this is probably about 103.40 perhaps. So this is probably looking at about at 105 here, so probably about 150 pips roughly, right? So you can see how we are able to recognize the bearish downturn, and then we can see price break above the trend line, break above the previous high to give us that confirmation of change of character, and then price pulls back a little bit, touching the left shoulder before reversing to go higher, right? Okay, so let's look at another example. So once again, this is also on the dollar index. You can see during this period, right? Okay, I know these are all bullish reversals, but because during this period from May all the way till October, the dollar index was in a very strong bullish trend. So obviously there's going to be continuations, and there's going to be retracements to the downside, right? There's going to be pullbacks along the way. So when we're looking for the pullback, and I was still pretty bullish on the dollar index during this period here. So that's why I was looking for this sort of reversals to give me that confirmation that this is a temporary pullback, and I'm looking for the longer term bullish trend to continue. So similarly, in this example that occurred towards the end of September, right, price is making a series of lower highs. You have one high here. You can argue this is also a sort of a, although price didn't break, um, come close to the upper trend line of the channel, but you can see price based on this candle here at the top of this wick here, this is another high. Then you can see the series of lower lows is very clear. For this example, the series of lower lows is very clear. And as price reverses, right, so the left shoulder is here, the head is obviously here. So as price reverses off the bottom trend line of the bearish channel, it rises up. Not only it breaks above the upper trend line of the upper channel, the bearish channel, but also breaks above this high here as well. So give us the confirmation of the change of character. And then as you can see here by this wick here, price drops down very low to where the left shoulder is. It probably didn't touch exactly the left shoulder, but should price drop very close to this level and reverse off it or reverse very close to it, that's also giving us a confirmation that this is a bullish reversal as well. So we can see that we have the confirmation change of character is confirmed by price breaking above the upper trend line of the bearish channel, by breaking above this high over here, right? And also we can see that the left shoulder is identified at this point here, the head is here, and then with this wick we're able to see that price came once again, didn't came exactly to where the left shoulder was exactly, but it came close enough and reversed strongly to give us that confirmation that yes, this is indeed a bullish reversal, and price continued to go higher. So this would probably be around like 106 roughly, let's say roughly 106, and you can see the top of the wick here going above 107. So easily 100 pip profit over what is this, 1 2 3 4 5 6 7 8 candles. So this for, so 32 hours, so about a day and a half, right? So probably you have to hold this as an overnight trade over 32 hours roughly, uh to at least capture um a pretty decent amount of profit in absolute terms of pips, and as well as a percentage term as well. Okay, now in this example here, uh we have example of bearish QM pattern, right? So okay, apologies for this part here. If you guys remember, this part here was the first slide that we covered, right? The first pattern here, right? This was the first one here. So for now, just try and ignore this bit, right? So as you can see here, price is in a strong bearish bullish channel. Sorry, it's in a strong bullish channel. It made the first high here, the second higher high here, third higher high here. This is also probably another high, 4, 5, and finally the head is here at number 6. Okay, so this is a series of higher highs in general, and this is also a series of higher lows, right? The first low is here, next low is here, this is another low, this is also another low, and then here, right, you can see this is where the change of character occurs. So right, so this low here, price is invalidated at this point here on the structure. Not only did this low go below the low over here, this is 1 2 3 4. So not only did price go below the low of number 4, right, it also clearly broke beneath the lower trend line of the bullish channel, right? So this also signals a change of character. So then, but price went to go up, make the head come back down, retrace a little bit again. So now we have the left, basically number 5 is the left shoulder, number 6 is the head. And as you can see, as price came back up, once again, it didn't touch exactly at where the left shoulder was, but it came very close to where it is. And then because it reverses off this level here, you can get the confirmation that this is indeed a bearish reversal here taking place here. All right. Okay. Then let's see this. Okay. Then let me go to trading view. All right. Okay. So just to zoom in a little bit here. Right. So this was the The change of character occurred over here, right, where price broke underneath the lower trend line of the bullish channel, then made the head. Remember, this is the oops. Hang on, where's my? So this is the head. This is the left shoulder. So you can see the change of character has occurred, but you can see this wick here didn't return exactly to where the left shoulder was, but it came close enough before reversing strongly to drop lower. So you can see from this case, in this example, price didn't hit the left shoulder exactly, but as it reversed strongly, you could take the opening level of this candle, which would have been at 104.30 as the sell entry, right? As a sell entry, and then if you had gone here, and then of course the stop loss would have been just slightly above here. So this wick at the head is about 104.70. So if you were to use 10 to 15 pip buffer, you'd set your stop loss at about 104.70. Oh, sorry, 104.80, 104.85, right? And if you had entered short here at about 104.30, you would have gotten 104. Yeah, so at least about 80 pips in profit as well. So pretty decent risk reward ratio, right? Pretty decent risk reward ratio. 104.30, 104.70, 85. So about 40 pips. 40 pips. You're risking 40 pips to make about 80 pips. So 2 to 1 risk reward, right? 1 to 2 risk reward. So pretty decent. Okay, let's see. Okay, so this was the other example. So I'm just zooming in here so that it's more easier to appreciate and visualize as well, right? So you can see price is clearly in bearish channel, right? It's making a series of lower highs, series of lower lows. As price breaks above the upper trend line of the bearish channel, and price also breaks above the previous high, right? We have a confirmation of the change of character. And then as price retraces down, once again, you can see that the bottom of this wick didn't exactly touch this level here, nor did it touch the left shoulder exactly, right? Even here, it didn't touch the left shoulder. Remember, this is the left shoulder here. This is the head. Price didn't drop down to this level here, but you can see because we had the change of character with price breaking above the upper trend line of the bearish channel and price going above this previous high, we have a good sense of confirmation that we do indeed have a bullish reversal on our hand. And as price reverses off this level here, right, we are able to at least start or probably open at about 102.60, going up to about 103.40, so at least about 80 pips profit here in this example. Right, okay, then moving on. As you can see here, for this case, there was no clear Quasimodo pattern, right? Why? Although this is a very obvious bearish downturn, right? And then price reversed to go higher, but you can see there was no clear change of character here. But in this scenario, we could have still identified a potential breakout as well, right? You can see price, right? Price is clearly trading in a bearish channel here, and then price essentially this we can see price actually making a double bottom, right? Price actually made a double bottom before breaking out. So you can see price, although there's no clear Quasimodo pattern here, right? Here you can clearly see the Quasimodo pattern take place, right? Over here it's quite clear. In this scenario, why I didn't highlight this, because we don't really see the Quasimodo pattern here, but we are still able to apply other uh, chart pattern reversals as well, right? So when price breaks out of this bearish channel, we can also see price making a double bottom here, right? Price bouncing off 99.57 on 14th of July, then once again on 18th of July again. That also gives us a good sense of confidence that price has indeed stabilized and gone higher. And as I mentioned, we can also overlay under indicators as well. So for example, let's say if I overlay the stochastic oscillator, right? Okay, let me get rid of RSI here. Right, for stochastics, I generally, I generally use the parameters of 20, 3, and 3, right? So 20 for the length and 3 for for both of the smoothing characters, right? Parameters, sorry. So in this case, there was no obvious Quasimodo pattern, but if you come back here, sorry, like I know we were talking about earlier, how can you overlay the Quasimodo pattern with other indicators? So in this example, I'll show you with the stochastics, right? So when stochastic dips below 20, typically it is signaling to us this is an oversold position, right? So if it is an oversold position, we would be looking for a potential bullish reversal. So we did get, so we have a combination of factors that contributed to this very bullish reversal, right? We had stochastics going below 30 and then reversing to come up, so signaling a potential bullish reversal. We also see a change of character in price breaking above the upper trend line of the bearish channel, and price breaking above, also breaking above the previous high, right? So we have 1, 2, 3 factors that give us a good sense of confidence that the change of character has taken place, and we are looking at a potential bullish reversal. So similarly here, uh, in this downturn here, there was no clear Quasimodo pattern, but we are still able to apply other aspects of technical analysis here. All right, Ranjit, okay, I'll try and put in the MACD after this as well. Just give me a minute. So similarly here, you can see stochastics have been oversold since 7th of July, right? Since all the way till 18th July, so for a period of 10 days, stochastics were indicating a oversold position, but obviously price hadn't reversed yet, right? But once price did eventually break above the upper trend line of the bearish channel and you can see here this it made a double bottom. This is what we would call a pullback support here, price making a double bottom and then bouncing off here. So we have the combination of price forming a double bottom here at this point in time. We can see stochastics starting to climb out of the oversold position and to rise, and also price also breaking above or out of the like if I were to extend this line trend line, even if I were to use this portion here, right, you can see price clearly breaking above the upper trend line of the bearish channel, forming a double bottom, and also stochastics starting to move away from the oversold position gives us a good degree of confidence that a bullish reversal is taking place, and we see that occur quite clearly here. All right, okay, Ranjit, you had a MACD. All right, so let's put that on. Okay, so put that on. I'll get rid of stochastics. Okay, so MACD, if you look at it over here, even with MACD over here, although the MACD is somewhat of a lagging indicator, but somehow the histogram turned green or turned bullish quite early on. But you can see here, even using the combination of MACD, stochastics, and the bearish channel gives you a good sense. And also observing this double bottom here, right? Observing this double bottom here, you can clearly see that this is a double bottom here, and price breaking out of this bearish channel, stochastics moving away from the oversold position, and also you can see that the signal line or the MACD line is trading above the signal line, and the histogram has turned bullish as well to indicate the bullish momentum. So you can see how you can overlay uh, various indicators to try and identify chart patterns as well. So I know this today's webinar was about Quasimodo trading strategy, but sometimes we should be able to identify all sorts of various chart patterns, right? Like in this example here that took place in June, 22nd of June, this was clearly uh, Quasimodo bullish reversal pattern. But just because we didn't observe it here in July doesn't mean that we are not able to capitalize on this bullish reversal here as well, right? So similarly, if you look here, right, this is in August, price is trading in a bearish channel, is making a series of lower highs, making a series of lower lows. We can also see stochastics falling down very sharply, going into oversold territory. We can also see the histogram uh, indicating a very strong bearish momentum, but then we can see all that sort of reverse and take place. You can see stochastics moving away from the oversold position. You can also see the MACD crossover occur, and at the same time you can see the break of structure, the change of structure as well, right? So if we zoom in here, You can see price has clearly broken above the upper trend line of the bearish channel. Okay, even if I were to put it over here, right, price breaking above the upper trend line of the bearish channel, price has also gone above the previous high, and we have other technical indicators to give us a good sense or a good level of confidence to tell us that indeed what we are witnessing here is a potential bullish reversal, right? Similarly here as well, right? You can see over here from 28 September till 29 September, so for a period of 2 days, price was pulling back uh, quite strongly. Right? You can clearly see that stochastics turning from overbought uh, territory and dropping sharply. MACD also indicating a bearish momentum, but then you can see all these indicators sort of bottom and reverse, right? You see stochastics move away from the oversold position. You see the MACD histogram becoming less bearish, and you can also see price has bounced off the lower trend line quite strongly, and of course price breaks above the upper trend line of this bearish channel. Price also breaks above the previous high, and we have all these factors here, right, on 2nd November, right, giving us a good set level of confidence that this is indeed a bullish reversal for price. All right, no worries, Rajesh. Thanks for tuning in. Right, and anyways, I've come towards the end of the session as well. Right, I've come towards the end of the session as well. I'm just going to quickly launch a poll, and then we'll cover a few other things. So please do give me I really appreciate if you can give your feedback as well. Thanks, Desiree. Thanks for your kind words as well. And thank you, Ranjit. So once the poll is closed, we'll just quickly do a quick analysis on the dollar index to look at what are the current levels you should be looking out for. All right. So really appreciate it if you guys can give me uh, provide your feedback, because we're always looking to improve our webinars with regards to the live trading analysis as well as the educational segments as well. All right. Okay. I think most of you have voted already. I think this is good enough. All right. Okay. All right. So close the poll. All right. Okay. Um. So. Right. Okay. Let's just. Right. Okay. So what? Okay. I will remove MACD and just keep. So maybe what I'll try and do is just highlight some of the more important levels to take note of. All right. I'll just get rid of. Okay. Okay. No. Right. Okay. So some of the key support levels to look out for. Right, so in this case, I'm using a Fibonacci retracement going from this swing low here on 14th July, going up to the swing high here on the 3rd October, right? Or 2nd, what is it? Oh, I can't guess. 3rd October. So you can see, let's pull up all the fibs. Let's see where because dollar index has been falling quite sharply this week or from last week onwards. So where would be the next major support level here? So we do see a pretty decent overlap level at about. So this is where the first support would be for the 4-hour time frame, right? Roughly here, you can see price reacting off this level here as a resistance back in 3rd of August, 8th of August, and then when price broke above it, finding support on 14 August, 15 August, as well as you can argue here as well on 30th August, finding support of around this level. So the first major support for the dollar index is this overlap level at 102.82, which also aligns quite close to where the 61.8% Fibonacci retracement level lies. So let's just keep 61%. Right, and with regards to the resistance, there's a decent case for a pullback resistance level around. This is, yeah, this is just an overlap. It's pretty strong overlap level here. So this was where I would identify
the first major resistance for the dollar index, which is at 104.42. Right, so let's just zoom in a little bit now, right? Because this is a pretty strong overlap level. Why do I say that? Right, you can see price finding support here back in mid-September before moving higher. Then when price broke underneath it, it ran into resistance here on 16 November, mid-November, before pulling away from this level and dropping. So this does indicate to me that this is a pretty significant overlap level, which is why I've identified it as the first resistance. You can probably also use the Fibonacci retracement starting from this swing high here, 10th of November. Now that the bottom has been formed, right, we can pull up all the fibs. Right, you can see that this first resistance also aligns quite well with the 50% Fibonacci retracement as well. If anything else, probably this, I would identify this as a intermediate resistance. Here you can see price finding support around here as well. Was there any other fib levels around here? Was there 38? No, 23 and 50. No, okay, so just 50. Right. So do take note. Since November, right, since start of November, the dollar index has been in a very strong bearish trend, right? We can clearly see the bullish trend was broken, right? You can see here, this was a pretty strong bullish trend, which finally got broken, and then we could argue that price was consolidating, roughly consolidating between these two levels here, right? Roughly, price was consolidating here, broke below this level, and now finally, after sideways tradings from 22nd November till 14th November, pretty much this was sideways trading. Price has clearly broken out of this sideways pattern and is continuing to drop lower. Right? But of course, with every bearish downturn, there's bound to be retracements to the high side. But for now, the bias for the dollar index is to the downside. All right. All right. Thank you everyone for tuning in today. Do look out for other webinars brought to you by IC Markets for this week as well. All right. Thank you everyone. Have a great trading week, and I'll just end up with the final disclosure. All right. The closing disclosure. All right. So do take note that do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose, right? Trading Forex and CFDs may not be suitable for all investors. All right, thank you everyone for tuning in today, and I wish you all the best in your trading journey for this week. All right, thank you, take care, and have a great week.